Thanks for coming on the show, Parker. I want to talk about your latest article, which is titled Bitcoin's Exchange Theory of Value. And you've been sounding the alarm on the importance of Bitcoin as a medium of exchange. And of course, you're building Zaprite, which is a Bitcoin payments company. Can you elaborate on the importance of actually using Bitcoin for trade? And, speaking to an audience of Bitcoiners, why should they spend BTC rather than cash or credit?
So yeah, and we can point to people to the actual article after, but one of the key ideas, and the reason it's in part why I'm focused on Bitcoin, but also just in laying out the case. I always want to like reinforce for people that there's not a moral imperative for them to go out and spend their Bitcoin, and that if they don't do that, then Bitcoin's at risk. But I did want to make the logical connection for people that there's increasingly a distinction between Bitcoin's use as a store of value and its use as a medium of exchange. And in my view, and maybe we can elaborate on this as a concept, is that in the context of a money like Bitcoin, or really any money, uh, its ability to store value is certainly tied to properties that make Bitcoin attractive as money. But for money to store value, it has to be useful in exchange. That the more easy a good or a form of money like Bitcoin is to be exchanged, that is part and parcel to why it stores value, that you really functionally cannot have one without the other. And while many people, especially when they're first adopting Bitcoin, think of it principally as an investment and are adopting it for its store of value property, they are still, even if they don't intend to spend their Bitcoin anytime soon, or possibly even ever, the reason why it's valuable to them is because it is so easily exchangeable. And that today that exchange principally happens between fiat currencies. But increasingly, and for very fundamental reasons, Bitcoin will transition from principally being exchanged for fiat to goods and services directly, because that is the most efficient form of trade. And so one of the ways that I break it down for people, or help kind of explain that principle of thinking about when they buy Bitcoin and say they convert dollars to Bitcoin, that is one exchange. So Bitcoin is being used as a medium of exchange there. They might have traded dollars for the Bitcoin, but that Bitcoin came from somebody. It might have come from a miner, or it might have come from another participant in the network. So there was an exchange on the front end, and now they're storing value in Bitcoin. And they might intend to store value in Bitcoin and never sell it for a year, 2 years, 3 years. They might intend to save it forever. But the value is only realized after the period in which the value is stored. And part of why it's able to store value is because the best forms of money are the most widely accepted goods to facilitate trade. So it's an exchange on the front end, storing value, and then an exchange on the second end. And that connecting for people in a very logical way, that even if you intended to save Bitcoin forever, to never spend it, to never convert it to another fiat currency or spend it on goods and services, the value of Bitcoin is still derived from your ability to exchange it in the future. And even if you are intending to pass it to your heirs, to pass it down, you're still transferring value when you pass it to your heirs. And then its value is predicated on the ability to exchange it in the future. I go through a thought experiment in the piece that I wrote, where imagine you just actually destroyed the keys to your Bitcoin. It's no longer a value. That unit of Bitcoin, however much it would be, is no longer valuable. And I make that point to help establish that it's not the same as saving it forever. The act of saving is actually an act of future exchange. And so that's the first part, to connect for people that even those that themselves believe that they're only using it as a store of value are storing it to some end, and it's to some end, to a future exchange, even if it's far off into the future. And then there's this idea that's probably even more fundamental, which is that any money derives its value by coordinating trade, and that a good's ability to coordinate trade, a la money, is a value to society because trade is not zero sum. And some people might look at that as a concept and say, well, that applies to every form of money, and it does. But Bitcoin is money, so it applies to Bitcoin itself. And that value isn't really derived because there's a digital unit on the screen that they translate to dollars. Money is valuable as a tool because people are using it to trade, and through that trade to actually deliver goods and services to a local economy. And that just because Bitcoin is emerging and being adopted as money for the first time, and just because it's principally traded for other fiat currencies today, doesn't mean that value isn't being transferred when that occurs. And it doesn't mean that logically, in order for Bitcoin to continue to maintain value and increase in value, that its use won't shift towards direct commerce. And then the last point and then I'll pause and maybe address some questions that you have, is that when you think about the concept of spending Bitcoin, people oftentimes say, well, why would I ever do that? Its value is going to continue to rise. But if you're spending dollars, it's the same calculus. Those dollars are being spent in opportunity cost of not having saved Bitcoin. And another fundamental, which is thinking about as more places become available to trade your Bitcoin, to say, and thinking about merchants accepting Bitcoin directly, thinking about in a local economy, your local grocer, your dry cleaner, the gas station, merchant 1 through 1,000. The more merchants that accept it, the more people that are willing to accept your Bitcoin directly, the more valuable your Bitcoin becomes. The more limited your options are to trade, the more limited the value is. And that should be fairly intuitive for people. So it's this idea that all money derives its value through trade. And that is also true of Bitcoin. And it's actually through trade, which is non-zero sum, which there's benefits from trade, mutual benefits, that's actually what allows for goods and services to be delivered, that the money is actually what allows for the economic coordination to deliver goods and services to an economy. And those goods and services really are the things of tangible value, and you're storing your money in a medium a la Bitcoin for a period of time to be able to access those goods and services.
Start mining Bitcoin today at marketplace.blockwaresolutions.com.
Yeah, that was really well said. And there's a lot I want to unpack there. And I guess to just summarize for the audience and summarize for myself, the things that are of value in this world, it's meat, it's shelter, it's goods and services, physical things that have to be produced. And money is of no use unless you can exchange it for those things in the future. So this makes sense to me. I've always thought that Bitcoin, like my framework has been, it must be widely adopted as a store of value before it can become widely adopted as a medium of exchange, mostly because vendors or consumers are spooked out by short-term volatility. Is this kind of the right framework to think about this?
I agree. Yeah, I agree with that framework entirely. And the way I might frame it is that somebody first has to understand why Bitcoin will reasonably or reliably store value over a certain time horizon into the future before they're credibly going to want to say, hey, just pay me in that form of money directly. So because it is tangibly easier to create an account at a Bitcoin exchange, whether it's something like River or Cash App or Strike or Unchained or Swan, and buy $100 of Bitcoin, or buy $200 of Bitcoin, or buy $1,000 of Bitcoin, or buy $5,000 of Bitcoin. That is actually an easier thing for a business owner to do. But at the same time, once somebody comes to logically understand why Bitcoin is viable as money, and I think on the front end of that evaluation, I typically point people to Bitcoin's fixed supply, and it's able to store value over time because it's got a fixed supply that's credibly enforced without the need for trust. That's the first building block. There's another second important building block, which is that Bitcoin's resistant to all forms of censorship, which makes it permissionless. But the permissionless nature of Bitcoin is also related to Bitcoin's ability to affect its fixed supply credibly, and the keyword being credibly. But that permissionless nature also is what dictates that anybody could plug into the Bitcoin network and receive Bitcoin from anybody else without the need for permission. So the concepts are tied together there in terms of Bitcoin's fixed supply and the importance of it being censorship resistance at the protocol level, not necessarily at a service provider level. So I agree that somebody first has to have some concept as to Bitcoin's fundamental viability as money. But once they get past that point, then if they are a business owner, it becomes very logical for them to want to accept Bitcoin as payment directly, because for them, it's the most efficient way to actually get Bitcoin. Because you could do it one of two ways. If you're a business owner, you could take fiat payments, take the fees of that payment system, take the potential chargebacks of that payment system, take the time that funds are put on hold, and then go and exchange it for Bitcoin. Or, and this is why trade in Bitcoin will shift. One of the reasons why it will shift to more direct commerce. It should be fairly logical to people that if you want Bitcoin as a merchant and you already understand why it stores value, that taking it directly from your customers is a more efficient, cheaper path than taking fiat, going through the fiat system, then only to convert it to Bitcoin. It's introducing a layer that is not ultimately necessary if what you want is Bitcoin.
That makes sense. Have you seen any merchants come to Bitcoin through the other direction? So let's say, they're tired of these 3% credit card fees, and maybe they see the value of, Bitcoin Lightning Network as instant settlement. They don't have those fees, but perhaps either they take Bitcoin as the payment, but just hold the dollars. Is that something you've seen at all?
I have seen that. It is definitely far, maybe it's slightly more than the exception rather than the rule. It's like 1 out of 10 versus 9 out of 10. And that it is ultimately a more challenged discussion because there are still accounting consequences. There's still infrastructure that they need to set up to be able to do that. And so it's like swimming upstream. And oftentimes when people do that, one of the challenges that comes with it is that there is this dilemma on the payer side of whether they want to introduce some friction on their side, principally from a tax perspective, to spend Bitcoin. And that more often what happens when people come to or try to come to Bitcoin from a payments first standpoint, from a merchant that does not yet understand Bitcoin's viability as money and has heard that they can reduce their transaction fees and then get it converted directly into dollars. And you can do that cheaper than going the other way. But they can't see the field of Bitcoin. They can't communicate to a Bitcoin audience why people should come and spend their Bitcoin. And so what ends up typically happening is the person invests their time to set up the infrastructure, and then sales of Bitcoin don't come through. And, or if they do, they don't come through in a meaningful way. And so in this early day of Bitcoin, it certainly is in the interest of the merchants to start saying, please pay me in the better form of money. But if you can't communicate your understanding of Bitcoin, and typically when we have merchants that are accepting Bitcoin to incentivize and drive Bitcoin denominated payments, they will put something else out on their website that says, I'm accepting Bitcoin and this is why. Values align. I think Bitcoin aligns interest between me and you. It stores value over time. That's why that's why I'm doing this. And that's why I would appreciate if you'd pay me in Bitcoin. Those type of merchants are far more effective in actually receiving Bitcoin payments, which then allow them to realize the benefits. I talk about this in another article that I wrote on my blog, which is I believe it's called my Pay Me in Bitcoin theory, which is if you are a consumer and you have a merchant that you value and they're asking to be paid in Bitcoin, it's actually rational for you to spend Bitcoin in that case, because you actually, like what you said, you value the rancher that's delivering you the food that's put on your table. You want them to be around. If you figured out why Bitcoin is best for you to make sense for you in your personal life and saving, then you also know why it would be good for the rancher to be saving in that too. And if the rancher wants to be paid in it, that you actually want the rancher to be around, and you can extend that out. Now, if there's certain things that you don't actually value in your life, then you probably shouldn't be spending the money on it anyways, and you probably don't spend your Bitcoin on it. At that same time, so I think it is very difficult for a merchant that doesn't understand Bitcoin and can't communicate to a Bitcoin audience to actually get the value out of it, though some people do that. At that same time, when that's true, I do think that the world is going to come to understand Bitcoin when they can more easily see it exchangeable for things like food at the grocery store, gas at the gas station. That the vast majority of all people probably need to start seeing that happen with some critical mass to then adopt Bitcoin, or to then be able to see why Bitcoin is money and see the importance of the fixed supply and see the importance of why it needs to be a permissionless network. So it's that many people might come to have Bitcoin unlocked in their mind because a rancher who first understood Bitcoin then starts to accept it as payment, and they can see, oh, well, that guy's actually, you can actually do things with your Bitcoin. And the more that happens, if it's actually in a major grocery store, then someone's going to say to themselves, I might not understand this, but you can accept it at the grocery store. Maybe I need to try to understand this. And maybe when they're thinking about it with that context in mind, maybe they're more easily able to see it.
Yeah. Would you think at that point where I can go down to Whole Foods or Shell Gas and spend my Bitcoin, are the asymmetric returns kind of gone at that point? Because I've always thought what would matter most for the Bitcoin price going up is not necessarily, I can go spend it anywhere, but it's Wall Street, it's the large financial investors, all the people with lots of capital actually buying into Bitcoin as a store of value. I've always thought that would move the needle in terms of Bitcoin price and purchasing power more.
My answer is probably yes and no. It's that I accept, or not accept, I would put forward that right now, no more than 1% of the world's population has a realistic understanding of the magnitude of what's happening with Bitcoin. That it's a better form of money, and that we're in the early stages of Bitcoin being adopted as money, and that the entire world is going to adopt Bitcoin as money. So if you start from that point, that very few people still understand Bitcoin, that for a indefinite period of time into the future, people coming to understand it by reading a book or listening to this podcast or consuming some form of content and then buying it for dollars will, in volume terms, be how Bitcoin continues to be adopted, and that there still are these massive asymmetric opportunities for gains in purchasing power because we are so early. Secondarily, I do believe that that it is a related phenomenon. That I don't think that we're suddenly going to go to the point where the gas at the gas station. I don't know where you're based, but if Buc-ee's received Bitcoin and or accepted Bitcoin as payment in Texas at their gas stations where they have 100 gas pumps, and each person that's coming through, and if you've never seen a Buc-ee's, it's a phenomenal sight. It's just beautiful. Literally picture a gas station that has 100 pumps and they're all full. And
Yeah,
you go
I live in North Carolina. I've been once. There's one in
okay.
South Carolina off I-95. It's amazing. Blew my mind.
Yeah. And so I think it's still going to be some time before a big business like Whole Foods or ExxonMobil is accepting Bitcoin directly. But there's a local grocer that we're talking to, and it's that person's already accepting Bitcoin, in their online store, they're working on, or at least considering it for in person, that it is more logical that the merchants that begin to accept Bitcoin first are smaller businesses that have one or two key decision makers, just for the reason that it's harder to get a consensus of a board of people or an executive team of a large company that have a lot of stakeholders. So, but for them, it might also help advance their understanding if they start to see more small businesses actually accepting as payment. So the more businesses that accept it as payment, the more people that will have their mind unlocked, the more people that will buy Bitcoin, the more people that will then start accepting it as payment.
Yeah. I've always thought of it too as like it's a cheat code for businesses, right? Because there's one place in my town that takes Bitcoin as payment, and it's like a dive bar where you can buy drinks and cigars and stuff. And I don't even drink, like I'm not into that scene, but I will go there as a consumer purely because I want to support a business that accepts Bitcoin. Like, I don't even really drink, but I'll just go there anyways. And so I feel like small businesses, it makes logical sense if you want to attract an entire new loyal audience of customers to simply accept Bitcoin, because Bitcoiners love to have each other's back.
It really does, because the way I think about that is Bitcoiners will change. It's really twofolded. Bitcoiners will change their behavior. So in the example that you use, that's a bar that accepts Bitcoin. If there's another bar, but you know that there's a Bitcoiner running the bar, well, I was going to go to a bar, so might as well go to the one that accepts Bitcoin. Two, it's a way for small businesses to find an audience. So if I think about realistically, because we're so early, any business, there's a orthodontist here in Austin that started accepting Bitcoin, and he networks within the Bitcoin community. Bitcoiners have a lot of kids, and then they say, hey, I could have gone to orthodontist A, B, or C, but this one accepts Bitcoin. They've communicated to me in part just by doing that why they share my values. I will go do business with them. And that if you think about businesses being online, e-commerce, being able to put out on their website, we accept Bitcoin, that it's a way to reach an audience where it might otherwise be difficult to find those customers that share your values, to attract them in. So it can actually fuel growth. But if you don't understand Bitcoin, then it's going to be difficult for you to actually do that, to communicate it credibly in a way that attracts those Bitcoiners. And so I do think that early on, and a lot of the people that we do business with or that are coming in early to accept Bitcoin payments through Zapray, they are certainly going on the offensive to be able to attract customers because of the fact that they accept Bitcoin. And then you could say, well, if that's no longer the case, if we get to this point where you can't differentiate yourself, well, you still benefit then because you're accepting a better form of money, and everybody's at that point in time where every merchant's already accepting Bitcoin as payment. Well, all the consumers have Bitcoin. That world has arrived for a reason, and so it doesn't matter that you didn't stand to benefit from being early. You still need to do it out of necessity, and essentially, it's been de-risked. All the consumers are already there, and you're doing it because you're following rather than leading. But the benefit remains the same. You don't necessarily benefit, at a steady state where virtually all the world's accepted Bitcoin already or adopted Bitcoin already. Everyone still has a benefit to use it because it's sound money and it's coordinating trade, and they're using it every day, literally, in that future state. But so I think that, like what you said, is absolutely correct, that it's a great way to acquire new customers, especially in a world that is increasingly commoditized, and it's a way to stand out. But then a second thing, and I don't know if I talk about this in the piece, but I shared it in other content. It's also important for those businesses, in one part because they're trying to attract growth to their business, but then secondarily, every business is going to find out that they need customers that hold sound money, because if your customers don't, then their fiat is inflating away, and eventually they're not, if they're only holding fiat, they're not going to continue to be able to be your customer and to buy your goods and services. So there's a very strategic aspect to catering your business to people that have the form of money that's going up in value, because that increase in purchasing power over time literally allows them to continue to buy your goods and services rather than downgrade their lives because their money got destroyed. And so that's just the other side of the strategic nature.
Yeah, you mentioned that idea in your podcast with Marty Bent recently, which I listened to, and it's something I hadn't thought about, which is when the currency is rapidly losing value. Like, yes, prices go up because there's more dollars in the system, but also that causes these distortions in the market where companies go out of business because their customers can't afford it, and so then goods become more scarce because companies aren't producing them, which causes prices to rise even further. So it's, high inflation just causes this nasty flywheel.
Yeah, and I think that's something that I try to articulate for people in a non-dystopian way. Like, I mean, I talk about the fact that, in my view, the dollar is in the process of hyperinflating, not because Bitcoin exists, but because they've printed too much of it, and there's too large of imbalances between the credit system and ultimately just the wealth distribution that the system can't sustain itself. And that's what dictates more and more money being printed, but that it's actually the printing of money that both causes the imbalance to worsen as well as causes the economic foundation to deteriorate, where oftentimes people think about either inflation or inflation progressing to hyperinflation simply because they think about it almost in a vacuum of there's goods and services and money's being printed, and the money being printed causes the goods and services to become more and more expensive. But the question is, what causes that to break? And the thing that actually causes it to break is what you were summarizing, which is that the way that people respond to more and more money existing is raising prices, and that process of having to change prices ultimately prices people out, and that's happening every day. Now we see people recording videos about how they can't afford food at the grocery or rent, and it's not, I mean, in no ways is celebrating that fact. That it's highlighting it because it's a massive problem. But that's what happens when, if I think about my local gym, when they raise prices, like, some people have stopped coming in, right? And then what ends up happening as a result of that is that the remaining customers that are there are essentially bearing more of the burden. And if the business continues to raise prices, each marginal price increase marginally prices somebody out, whether it was an existing customer or someone that would otherwise become their customer in the future. And as money is printed, what's actually happening is it's making it more difficult to coordinate trade, and businesses actually fail as a function of needing to constantly change prices, pricing customers out. And that what actually happens is money is becoming more and more abundant through the function of printing it, while real goods and services actually become harder to produce, ultimately more scarce relative to the amount of money. And so it's not just this equation of more money existing relative to a constant number of goods and services. It actually makes the delivery of goods and services harder. And for those people that were thinking about, well, if it put me back in the consumer side, if I'm the person that has the sound money that even in this world is expected to increase in purchasing power by an order of magnitude or orders of magnitude, I'm one of those people, but I'm spending my Bitcoin. Well, one, it's because virtually all my savings is in Bitcoin. So it actually improves my life when one of my local merchants accepts it that I value. But then secondarily, when I think about buying beef for Bitcoin for my local rancher, or paying my doctor here in Austin in Bitcoin, when you think about the marginal transactions, it's this very small fraction of my total savings. It's 0.0001%. The individual transactions are such that, and then as Bitcoin increases in purchasing power, the cost of those goods is actually getting cheaper. And so each time I'm actually spending less of my Bitcoin over time. But that is what connects back to this idea at the beginning of the point I was making, which is because my purchasing power is increasing, I can continue to afford these goods and services. And that is ultimately critical if you're a business owner or merchant selling your goods and services into the market over time. Because if your customers are the ones that only have fiat that has lost 30 or 50% inflation in food over the last 4 years, 25% loss in purchasing power of the money, that if that continues to happen, those are your customers, and that's the lifeblood.
Right. And I guess another way to say it is if your customers are Bitcoiners are going to get rich. And as Michael Saylor kind of said, there's a word for people who save in fiat money. We call them poor. And so if your customers don't save in Bitcoin, they're going to be poor. They're not going to be your customers anymore. And this idea you brought up, we also saw this idea of like two conflicting forces on prices. So fewer businesses producing goods and services plus more dollars causing higher prices. This is exactly what happened in 2020 because all of the businesses shut down. They stopped producing goods and services. And at the same time, the Federal Reserve printed a bunch of money. And so, of course, prices increased drastically. What role do you think the unit of account function of money plays in this kind of framework? Because most often when I see businesses that accept Bitcoin as payment, they're still sort of denominating it in fiat rather than denominating it in Bitcoin or Satoshis.
Let's start at the fact that the dollar is the unit of account, and that in a world where less than 1% of people really understand what's happening in Bitcoin, and that and one way I think about it is that almost certainly fewer than 1% of the world has any material exposure to Bitcoin, which translates to their understanding of Bitcoin as money, and that number from a small base is growing fast, and in the next adoption wave is going to increase likely by an order of magnitude by 10 times, but it's still a very small base. So if we accept that Bitcoin, the world's understanding of Bitcoin is still very early, and that the dollar is the unit of account, that the consequence of that is that except in very rare circumstances, you're actually if you want to accept Bitcoin as payment, you're actually introducing more friction by pricing something in Bitcoin. It's you're then swimming upstream at that point, because what it means to be a unit of account is it's not just things that are priced in Bitcoin. What it means to be a unit of account is that everything is priced in that unit. Okay, it's not just what is on your financial statements. It's the prices at the grocery store. It's also the fact that whether you realize it or not, you're doing hundreds, if not thousands, of economic calculations in that unit, thinking about various different things as it relates to your business, your personal life. It's almost in your subconscious. When you even think about what you need to produce in a given month to obtain the services that you need, everything is dollar based. So until the majority of the world has shifted over to viewing Bitcoin as money and understanding why, it is not just unlikely, it's almost definitionally not possible for Bitcoin to be the unit of account. But my view is that so long as Bitcoin is able to credibly enforce its fixed supply and remains resistant to all forms of censorship, that is what will causally result in Bitcoin being adopted globally. And beyond some critical mass, I don't even think it's 50%. I think it's something like 5 to 10% of people, because those people will have the access to the greatest amount of information and the most wealth to store, that then everyone will rush in. And then as everyone rushes in, that's when Bitcoin will become the unit of account. I also believe, though, that it will become the unit of account kind of in tandem to being rapidly adopted as a medium of exchange. That will go through this process as people in a much faster future version of history are seeking out to be paid in Bitcoin, that they will actually start to price things in Bitcoin. And at that point in time, things will still probably they won't be nearly as volatile as they are today, but they won't be as stable as people associate money to be. If you think about the reverse side of what would play out, it's like in hyperinflation, there still are fiat denominated prices. They're just changing quickly. As Bitcoin's being rapidly adopted as money, once we pass that critical mass point, which is difficult to say what is the marker, then people will start pricing in a Bitcoin in that future state. Once the majority, I would say, of the world's wealth, or people that hold the majority of the world's wealth, are starting to see Bitcoin clearly, then they'll start to actually try to price things in Bitcoin. It still might change more frequently than you were typical, to prices changing today. But then as people more and more adopt it, then those prices will be stable and static and not change. And until that point in time, It's just, again, swimming upstream to try to price things in Bitcoin when everybody's mental models are around dollars, because even if you're grokking Bitcoin and 99% of the world is not, you're communicating in a language that 99% of people don't. So why swim upstream? And what people do in the world of Bitcoin today, which you mentioned, is they'll set a dollar price at the time that someone's going to pay in Bitcoin. They'll calculate the amount of Bitcoin based on the then prevailing Bitcoin exchange ratio, which the two things are more known to people: the dollar price and generally what Bitcoin is worth today in dollar terms. And then that that script will flip over time, but only as a function of more people figuring out Bitcoin and why it stores value.
Yeah, that makes sense. So once we're beyond the threshold of mass adoption, Bitcoin won't have that driving force of it on its exchange rate and its purchasing power. Plus, you're going to see prices in fiat terms change much more quickly as the dollar pushes towards the end of its life. So at some point, Bitcoin prices actually become less volatile than dollar prices, and at that point, it'll be a better unit of account. In your
And I think and things will actually be priced in Bitcoin in that term. So the
yeah
concept, just like when you think about, because and this is also what it means to be a unit of account. When you say, and there's just something else that's fundamental that doesn't really have to do with payments. It's that the reason why Bitcoin is being adopted, it has this fixed supply of 21 million, but it's also a concept that I explain in the book that I wrote, is that money converges on one form of money. Economic systems converge on one form of money. It's actually the process of convergence which allows for a price system to form. And so when everybody's holding Bitcoin, when everyone's understood that Bitcoin is money, it's logical that then and only then do things start to be priced in Bitcoin. But if we think about like dollars, if a beer costs $6, what's the value of a dollar? Right? If that, even that mental model is hard because the dollar is the pricing unit. So we think about everything of value in dollar terms. It's like you could say, well, a dollar costs 1/6 of a beer if a beer costs $6. But even though that is true, as a mental model, it's like, what? No one thinks that way. And so it's that as people converge on Bitcoin as the consensus money, then and only then can people start to think about goods and services in Bitcoin terms. But then the price of Bitcoin itself will kind of fade away because Bitcoin will be the pricing unit, that the ribeyes will cost a certain amount of small denomination of Bitcoin and one that is increasingly not volatile.
Yeah, that makes sense. And one point I would throw in there too is like I like this analogy or this comparison of one beer being $6 or a dollar being a sixth of a beer. It's like I see a common misconception that price is equal to value, rather than if I buy a beer from you for $6, I value the beer more, but you value the $6 more, and so value is entirely subjective, and people have this misconception. Do you think that the ETFs, do they pose a threat on Bitcoin, being able to maintain a credibly fixed supply and stay censorship resistant, and have, all this hype around the ETFs kind of detracted from your mission of promoting Bitcoin as a medium of exchange?
No, not at all. I think that, and part of what I describe in the piece, Bitcoin's exchange theory of value, it's that any net um, any net benefit to Bitcoin being able to increasingly facilitate exchange of any kind is what helps derive value through Bitcoin. So that the more trade and exchange that Bitcoin can facilitate, the more value that is derived through that. So in this current iteration of Bitcoin, it is logical for more places to open up that enable exchange of Bitcoin for fiat, whether that's dollars in the United States or euros in Europe or yen in Japan or anywhere in the world. So the more businesses that are opening up and saying, you can sell your Bitcoin to me for dollars and I'll sell you Bitcoin for your dollars, that they're using fiat currencies as intermediaries, but Bitcoin is still transferring. Like, think about when somebody buys Bitcoin for the first time with fiat, that Bitcoin is coming from some other holder of the currency within the network, and it's transferring to the new holder. So that itself, and it's like I'm very supportive of large institutions adopting Bitcoin, because my view of it is that as Bitcoin grows, as it increases in size and grow at every level in terms of the mining infrastructure, the number of people that hold it, the businesses that support it, Bitcoin becomes more secure and more resistant to censorship as it gets larger. It gets harder to co-opt as it decentralizes. It doesn't matter, in my view, as to whether BlackRock's a big entity and 400,000 Bitcoin's a lot of Bitcoin. It's still a small percentage of the total, and we're getting to this tipping point where it's about to force the equilibrium in quote price of Bitcoin way higher, that it's going to be harder and harder to accumulate. And I think that what would be more consequential as a risk is not the ETFs. It would be looking at, is any one holder of the currency too large? And too large, again, is to a debatable degree. But if a single holder was holding something like 20% of the currency, then you could start to maybe get concerned. But if you look at, in the way I think about the ETFs is, the ETFs are all held, or 9 out of 10, at least in the United States, are held by Coinbase. So the amount of Bitcoin that Coinbase holds is actually more consequential than the amount of Bitcoin that BlackRock holds. Because in the context where if there was a contentious potential hard fork, like what happened in the block wars in 2017, that somebody that controls the keys to Bitcoin, and technically speaking, Coinbase has a contractual obligation to BlackRock, and if they don't do what BlackRock wants, then they've got legal liability, but they are controlling all that Bitcoin at the end of the day. And if they chose to sell a fork and buy the other, they could influence the market balance of what version of Bitcoin goes forward. And when I look at it, and you might have access to better information than I do, but as the ETFs have come on board, if we look back to the amount of Bitcoin that Coinbase held 6 years ago versus today, it's lower, not higher. And so I look about it relative to back then when there was a concerted effort to fork Bitcoin and change the block size, of which Coinbase supported. They weren't able to change Bitcoin relative, because security is always relative, and we don't know how secure Bitcoin is until a threat vector appears. Well, Coinbase as an entity, as a custodian, despite the fact that all these ETFs have come online and are holding, or the majority of them are holding with Coinbase, nominally they hold less Bitcoin, and Bitcoin is 100x to 1,000x the size as it was back then. In the middle of 2017. And so it is functionally more secure now, and it's also more distributed, which makes it inherently more secure. So I don't see the ETS as being a problem. I see it as just a different on-ramp. I do think, I highly encourage people that there are a lot better ways to own Bitcoin, that you hold it directly with a custodian and it would be better. But at the same time, more people finding out about Bitcoin because BlackRock and Larry Fink are out there saying, hey, this is a viable asset, this is a viable currency, fiat monies are being debased, that's a good thing. That actually helps knowledge distribute. And if we're being practical about the actual percentage that they have today, and that credibly they'll be able to accumulate, while the entire world is increasingly finding out, it's like once Microsoft is competing with BlackRock, it's like maybe they do buy the BlackRock ETF, or maybe someone like Microsoft's more like Tesla and says, oh, we'll just buy the Bitcoin. We're a technology company. We understand what's happening here. We understand cryptography. We don't need to own it through an entity that introduces a series of incremental series of counterparty risk. So I think of it as a net positive. It's something to be aware of, but the threat vector would be the consolidation of holdings, and it's functionally Bitcoin over time gets less and less consolidated, even while there remain some very large holders.
Yeah, that was really well said. And I'd never thought about it like that, because you're right. Coinbase 4, 5, 6 years ago, they held about 1 million more Bitcoin than they do now. And at the time you had this really contentious hard fork with the Bitcoin Cash split off. And so if they didn't abuse their situation then it's far less likely that they could or would today. So I'm really glad you said that. I never thought about it like that. That's going to be my go-to FUD buster narrative
Well, I would
going
say that
forward.
Coinbase was part of the SegWit 2X. So like they were part of the group that was trying to put forward the change to Bitcoin, and they were not able to. I think so. It's a demonstrated way. One way that I think about it is at that point in time in 2017, you would have this statistic better than I do, but the the Bitcoin hash rate was something like 5 or 6 exahashes, and now it's
It's
600 to
about 700.
700 exahashes. So hash rate has increased by 140 times. At that time, Bitcoin was between, when the New York Agreement was crafted, which was this attempt to hard fork Bitcoin and double the block size, which ultimately failed. And it was supported by large Bitcoin miners. It was supported by Coinbase. It was supported by other financial services providers, not just Coinbase. The only reason I'm raising Coinbase is because they're the largest holder and they're who the ETFs are raising. I'm not, just trying to pick on Coinbase. But the point is that at that time, Bitcoin was worth roughly $1,000, and there were about 15 million Bitcoin in circulation. So Bitcoin in total was worth 15 billion. And today it's at equilibrium, storing about 1.4 trillion. And recognizing that Bitcoin's security model is a function of decentralization. And as more parties compete for the underlying unit of currency, naturally, just by sheer math, if 100 times the number of people try to demand Bitcoin, then the unit of the currency gets distributed to more people. More parties enter to introduce custody, like the likes of Unchained or Casa providing their service, or Fidelity providing their service. That doesn't have to be non-custodial. So like more, and that's just in the United States. There's other institutions that are providing custodial solutions in the UK and in Europe and in Japan for those audiences. So there's just this very natural balancing function of, as more people come to understand Bitcoin, the network gets larger, it gets more distributed, and the risk of a centralization point gets less and less. And you can only look to those past markers and say, when was the network stressed? When was there a threat to the network? And was it successful? Is this similar? And is it more or less consolidated or centralized today than yesterday? And when we think about that past time where this came to kind of a head, Bitcoin is far larger and it's more distributed.
Yeah, that was well said. And you answered one of the questions I had for you, because a common criticism I hear is obviously Bitcoin can't scale as payments on layer one. It's just technically impossible to service all 8 billion people. Layer two, Lightning is great, but it's still, my boomer parents aren't going to be setting up their own Lightning node. And so a lot of the payment infrastructure does kind of rely on third parties, but it being decentralized and there being, dozens, hundreds of different options for Bitcoin payments, that's going to be sort of what keeps the network secure.
Yeah, the most important thing is that Bitcoin continues to decentralize, that there's sufficient competition, because in that period where they tried to change the block war or the block size, 90% of the miners had signaled that they were supportive of it, and everyone found out that miners are paid to do a service, and that even with that much concentration at that point in the network, they couldn't force a change. So long as Bitcoin is scaling and getting larger, because in that case, 90% of the miners, they were all competing with each other, and that was fundamentally why they couldn't collude with each other, because it was too large to do that. There was sufficient incentive just to be honest and to carry forward with the existing rules. The same applies to financial institutions. No one has an interest to undermine Bitcoin, and the larger that Bitcoin gets, it's not just out of an interest not to undermine it. It's that fundamentally you can't. Like there was this, for people that are newer to Bitcoin, I can't remember how long ago it was, but Binance got hacked. Large foreign exchange, and the CEO came out and said that they decided that to not tell people to roll back the chain to prevent it. And the point was, it was like, no, you couldn't do that if you wanted to. Like it was impossible. The funds were gone. You could pursue legal recourse to try to find the party that stole it and try to get the police to go raid their home or whatever, but that money's gone. There's no rolling back. He kind of like represented as if it was possible when it wasn't. And so I raise that to say the same thing exists with financial institutions that are helping people with payments. I don't think that, and I don't accept that we're just going to live in this world where all payments in Bitcoin go through financial institutions. I think that that would be a bad outcome. So long as it's possible for someone to attain that directly, to be able to do it on their own, even if it is technically challenging, if it's feasible. And when I talk about feasible, like the Lightning Network today gets a lot of criticism. It is so early, but we are helping people at Zaprite accept Bitcoin payments to non-custodial Lightning nodes today. They're doing it, and these are not technical businesses. These are bars and spas. So it's challenging, but it's technically possible. And that my view of it is, as Bitcoin adoption increases 10x, 100x, as that means that the mind share of the brightest minds in the world, 10x, 100x, will be staring at Bitcoin, seeing the field, seeing that it's this beautiful system that's honest and fair, that has this fixed supply, and that represents sound money, and that is to everybody's benefit, and that the incentives are baked in to innovate, that as 10x, 100x the number of people stare at the problem, even without changing Bitcoin potentially, there will be ways to facilitate Bitcoin payments in far more seamless ways. But the way that innovation happens, it has to happen progressively. So what's available is there today, and it's working, and people are adopting it. As those people adopt it, that will actually attract more capital to innovate. And so it's not this static world which says we have to envision this world that our kind of this version of human brains can understand, because there's a lot more people coming to look at the same equations that are going to help innovate. It's kind of like thinking about the progress of innovation in any industry. And part of, like, I'll look at it and say, imagine when the first credit card was created for fiat payments, and that was advancing checks, right? Well, I don't think anybody could have imagined, or maybe like the very few innovators could have imagined, that you're going to have an iPhone and that you're going to tap that with this thing called NFC to pay. But we would have never gotten to the point of having an NFC to tap to pay if not for advancements in credit cards, right? And so I think that the same pattern will follow with Bitcoin, is that everything's clunky to start. As more people adopt it despite its clunkiness, that attracts capital, the tools get easier to use, more mind share is unlocked, more innovation happens. And some people say that sounds like a hope and change strategy. And it's not. It's one of logical progression, where if you accept that this idea of finite scarcity in Bitcoin is not trivial, it's this earth-shattering change of the world, that somebody figured out how to put a puzzle piece together to create money that couldn't be printed, period. That problem that was worked on for 30 to 40 years previously was so much greater in magnitude than how we scale payments, that anything that comes from that foundation or relative to that foundation is pedestrian. And that, actually having worked in Bitcoin for almost 8 years now, you see the progress. Like 6 years ago, I guess, or 7 years ago, the change was implemented to be able to enable Lightning. But if we went back 3 or 4 years, the rate of Lightning payments that failed would have been something like 30 or 40%, in that order of magnitude. Now there are transactions getting done on the Lightning Network. It's like very low failure rates. I'd say 99% success. And the transactions that are going through and being routed are in the thousands, not single-digit dollars. And so we are seeing the improvement of that. And that is what's actually enabling merchants to actively start to accept Bitcoin payments and Lightning, even though a lot of merchants are taking on-chain payments too, because they can get final settlement and reach self-custody far easier via that mechanism. And there's just not sufficient amount of commerce today happening, where using the main chain for for transactions is viable, save and except for some periods of high volatility where fees spike, but generally, and so like you can just see like the infrastructure improving meaningfully, not not linearly, and as more people adopt Bitcoin, it is actually the opposite of logic to believe that would slow down for some reason.
Yeah, very well said. And I 100% agree because they kind of get lost because Bitcoin's only 15 years old, right? Imagine when Bitcoin's 50 or 100 years old and the price is orders of magnitudes higher, the incentive for developers and entrepreneurs to build these solutions and innovate on Bitcoin is going to be there. And so we're going to see a lot more get built out. And like you said, we've already seen great innovations happen on Bitcoin, on Lightning over the last few years, even since I got into Bitcoin in late 2020. So over the last 4 years, I've seen a noticeable change in kind of the ability to transact with Bitcoin. I want to be respectful. Yeah, go ahead.
Yeah, I was going to add one point, but think about how Microsoft or some shareholder just put on Microsoft's proxy statement the vote for whether or not Microsoft should hold Bitcoin. Microsoft's board has advised strongly against it. Tesla and Square are the only semblance of technology companies that are public companies that own Bitcoin. MicroStrategy too, but in terms of their core business being very large. So Microsoft, Google, Apple, JP Morgan, any sort of fintech company, Stripe, they don't own Bitcoin. Now, there are certainly people within those companies who there are Bitcoiners, but from a product standpoint are not yet working on Bitcoin. And so it's just thinking about as all the largest technology companies start to understand Bitcoin and that they haven't yet from a relative proportion perspective and objective perspective, that just think about all that mind share working on Bitcoin, that it is not logical to believe that solutions will not continue to advance, knowing, like as you said, and as I've experienced, that the advancement from year to year, just looking back the last 3 to 4 years, is significant.
Yeah, you've got all those companies with all that, thousands and tens of thousands of people, human capital, crunching stupid spreadsheets and PowerPoints instead of developing on Bitcoin. Once that is focused on building on Bitcoin, we can only imagine kind of the advancements we'll see. And we're kind of coming to the top of the hour here, and I know your time is valuable. So I have one more question for you. It's completely different than what we've been talking about, but you tweeted earlier today that you did vote for Donald Trump, and earlier this year you echoed frustration with his conflation between Bitcoin and crypto, and even more recently we've seen him launch his own token. So why did you decide to cast a vote for him in spite of this?
I am a hardened Bitcoiner. That I think that too many people compromise or have compromised in the past this conflation between Bitcoin and crypto, and that I think of Bitcoin being as something that's highly consequential to, just selfishly thinking about myself, my family, my local community, economic stability. Definitely, care about, beyond that too, and that oftentimes when technology is adopted, it is a luxury good, and then it becomes commoditized and it's able to be distributed to more people. And given the magnitude and seriousness of this, it's like everybody needs sound money. Money is not a luxury good. It's a basic necessity to having literally the most basic things that everyone takes for granted delivered to them on a daily basis. Clean water, food, basic health care, gas at the gas station. And I kind of view us without, I'm an optimist by nature because I found Bitcoin, but I recognize that there's this critical pain point and problem in front of us. And it's offensive when I view it as people actually, it is harder for people to understand Bitcoin to then be able to contribute to the solution if they get their mind wrapped around this idea of crypto, because it's ultimately snake oil, in my opinion. So it's not just swimming in parallel streams. It retards somebody's growth to understanding Bitcoin. And people that are in positions of power understanding Bitcoin will help everybody be in a better position in aggregate. And so when Trump has, quote, Bitcoin advisors around them that are advancing shitcoins, cryptocurrencies. It's personally offensive. I've, there's selfish reasons, but there's reasons beyond just personal gain that I'm working on Bitcoin. And it's just such in my opinion, not a disaster, but it's just a bad outcome that the people around him weren't able to give him better advice. And that I think in order to be consistent, it's like when people display poor judgment, you have to be able to criticize them, but then put things in a stack ranking of how important is it that this person do this. One thing that I didn't mention in the tweet was that he is promised to release Ross Ulbricht, and that's also important to me. But beyond that, I'm a Bitcoiner and I'm working on Bitcoin and I have my own personal interest, but I'm a Texan first, American second, American first, Texan second, however you want to look at it. And I think that it's just, there's a lot of things that have happened over the last 4 years, but realistically 8 years, that are advancing down a bad trend from a constitutional perspective, particularly censorship, and everything follows from censorship. And for me personally, it hasn't sat well. I feel like I'm living in a reality distortion field, or other people are, where from the day that Trump walked into office, he's functionally been politically prosecuted, first with the Russian hoax, and I think that and then there's been a slew of things that have proceeded since then on the censorship side that have, basically combination of censorship and propaganda. And I think that he's the candidate, and I said it in the tweet, but he's the only candidate that hasn't politically prosecuted one of his opponents. He's the only candidate that hasn't conspired with large tech platforms to censor speech and news. He hasn't called his opponent Hitler, and he's taken a bullet, and he's actually running a primary. And that there's some foundational things that, even though I have problems with the fact that he's launched a cryptocurrency, and I think it's a display of bad judgment, that in the order of the foundational importance to the Constitution, I think he's somebody who's demonstrated by actually having been in office that he respects the Constitution, he respects the rule of law. And I think that I probably share Elon Musk's view, is that seems to be what's at risk, because there are people that view that as a parchment guarantee rather than actually the founding principles to a stable governance system. And so, I think it's important. So I put it out there. Probably, a lot of people that are upset about it, but I also think that we have to be in a better position to disagree with each other and to be okay with that, because I've lived the last 4 years of my life. I always tell, I've got family members that are on the other side that just absolutely hate Trump. And I tell them I've lived the last 4 years of my life, and I've never allowed the fact that Joe Biden is president to ruin any single day when I got up. And, this is what I view. And if you want to disagree with me, that's fine. We have to be able to disagree more respectfully. And that starts with not prosecuting political opponents.
I really appreciate this, Parker. I think that was one of the most nuanced takes I've heard on the election in this entire cycle. So I greatly appreciate that. Greatly appreciate you coming on and sharing your thoughts on Bitcoin. Where can we send the audience to keep up with what you're doing?
So if you're a business that's looking to accept Bitcoin payments, check us out at Zaprite, ZAPRITE.com. Happy to help. I'll help you directly. Think it's important. So again, I do think it's important that people need to understand why Bitcoin stores value before they're credibly in a position to do that. But if that's you, definitely reach out. You're the type of business owner that I think needs to take that forward action. If you're interested, go to my blog, graduallythensuddenly.xyz, to read that piece, the Bitcoin's exchange theory of value. If you want to learn more about just the importance of exchange to the fundamental value of Bitcoin. And then you can follow me on Twitter, Parker A. Lewis, or our company, Zaprite App. So ZAPRITEAPP at Zaprite App.
Awesome. Thank you, Parker.
Yeah. Appreciate you having me on, Mitch.